Welcome, entrepreneurs! Today's session is all about one of the most crucial aspects of running a successful business: accurate record keeping. Whether you're looking to maximize your tax deductions or simply ensure compliance with IRS regulations, keeping precise financial records is key to making tax season stress-free and setting your business up for long-term success. By the end of this session, you'll understand the importance of accurate record keeping, how it can help you save money on taxes, and how to be audit ready in case the IRS comes knocking. Let's dive in! First things first, keeping accurate financial records isn't just a best practice, it's a legal requirement. The IRS mandates that all businesses must maintain records that support their income, deductions, and credits claimed on tax returns. Failure to keep proper records can lead to disallowed deductions or even penalties. The records you need to keep include receipts for business purchases, invoices for services or products sold, bank statements for transactions related to your business, payroll records if you have employees. Without these records, you might find yourself in a difficult position come tax time and worse. If the IRS conducts an audit, inadequate documentation can lead to major headaches, including penalties and interest on taxes owed. Let's take a look at a real-life example to see why accurate record-keeping is so important. Mike, a freelance consultant, claimed a $15,000 deduction for travel expenses last year. However, when the IRS audited Mike's return, he realized he didn't have detailed records to support the claim. Without receipts, dates of travel, and proof that the trips were for business purposes, the IRS disallowed his deduction. As a result, Mike had to pay taxes on the full $15,000 plus penalties and interest. If Mike had kept accurate records, he could have avoided these extra costs and protected his deduction. Keeping your financial records organized is one of the most effective ways to avoid the problems Mike faced. Here are a few tips to get started. Use digital tools or accounting software. There are plenty of digital tools and accounting software options that make organizing and tracking expenses easier. Tools like QuickBooks, Xero, or even Google Sheets can help you categorize expenses and store records securely. Keep separate business and personal accounts. Always maintain separate bank accounts and credit cards for your business. This makes it easier to track business-related expenses and avoids confusion. Regularly categorize expenses. Whether you do it weekly or monthly, categorizing expenses regularly helps ensure you don't miss any deductions. Typical categories include office supplies, meals, travel, utilities, and marketing costs. When your records are organized, tax season becomes much less stressful. You'll be able to quickly pull the documents you need and reduce the risk of errors or missed deductions. Now, let's take a look at how keeping accurate records can help you maximize your tax deductions. Sarah, a small business owner, was diligent about tracking her business expenses throughout the year. She used accounting software to track everything from home office expenses to business travel. When tax season arrived, she realized she had $18,000 in legitimate deductions, including office supplies, utilities, and marketing costs. Because Sarah had properly categorized and tracked her expenses, she was able to deduct the full amount, reducing her taxable income and saving herself approximately $4,320 in taxes, assuming she's in the 24% tax bracket. By keeping good records, Sarah ensured she didn't miss out on any valuable deductions. One of the most stressful situations an entrepreneur can face is an IRS audit. But if you've kept detailed, accurate records, the process can be much smoother. Here's what you need to do to be audit ready. Maintain documentation. Keep receipts, invoices, contracts, and any other documentation that supports your income and deductions. The IRS can ask for proof for up to 6 years, so don't discard documents too soon. Track mileage and travel. If you're deducting vehicle expenses or travel, make sure you have mileage logs, dates of trips, and business purposes clearly recorded. The IRS will want to see detailed records for these deductions. Payroll records. If you have employees, Keep payroll documentation for wages paid, tax withholdings, and benefit payments. These records should be well organized and up to date in case the IRS wants to review them. By keeping accurate and organized records, you demonstrate to the IRS that you're diligent and compliant, which can lead to a faster and less stressful audit experience. Accurate record keeping doesn't just help with taxes, it also provides valuable financial insights into your business. By regularly reviewing your records, you can monitor cash flow, ensure you have enough cash on hand to cover expenses and manage growth. Identify areas for improvement, spot trends in spending, and identify where you can cut costs or increase efficiency. Make informed decisions. Having a clear picture of your finances helps you make smarter decisions about hiring, expansion, or investments. For example, Tom, the owner of a landscaping business, used his records to analyze his spending on equipment and supplies. By reviewing his expense reports, he identified a supplier that was overcharging him. He switched vendors, saving 10% on equipment costs, which boosted his profit margins. In conclusion, accurate record keeping is a critical element of running a successful business. It ensures you're compliant with IRS regulations, maximizes your tax deductions, and gives you valuable financial insights. Here are the key takeaways. The IRS requires businesses to maintain accurate financial records to support income, deductions, and credits. Use digital tools and accounting software to streamline your record-keeping process. Keep separate business accounts and regularly categorize expenses to avoid confusion and missed deductions. Being audit-ready means keeping thorough documentation of all business activities. Accurate records offer valuable insights into your business's financial health, allowing you to make informed decisions and improve profitability. Thank you for joining me today. I hope this session has highlighted the importance of accurate record keeping and how it can save you money and time. Remember, by staying organized and diligent, you're setting yourself up for both tax success and business growth.